This object, the bicycle, and this system, the financial market, seem entirely unrelated. Yet, a hidden physical law connects them. Understanding this law is the difference between consistent profit and the catastrophic failure that 95% of traders experience. The connection is not a metaphor. It's a mechanism. Most aspiring traders are told to watch the charts, track every tick, and react to every news event. They are taught to stare at their feet while pedaling. But any cyclist knows, the moment you focus on the pedals, you lose your balance and crash. This is the first layer of the paradox. In trading, this fixation on micro-movements is called noise. The novice trader is addicted to the noise, believing they are in control. In reality, they are creating the exact instability that guarantees their failure, just like the wobbling cyclist. The professional, like an experienced cyclist, does the opposite. Their gaze is fixed on the horizon, on the destination. They use the pedals, but they do not focus on them. Their mind is occupied with the trend, not the temporary noise that surrounds them. This difference in focus is not a personality trait. It is a direct consequence of understanding a physical force. This force is what keeps the bicycle upright, and it's the same force that can stabilize a trading portfolio. It's a force of momentum, but the physics go deeper. The very act of steering a bicycle holds a second, even more counterintuitive secret about market dynamics. A secret that, when misunderstood, causes traders to turn directly into disaster when they are trying to steer away from it. To turn a bicycle right at speed, you do not simply turn the handlebars right. You initiate the turn by pushing the handlebar left for a fraction of a second. This is called counter-steering. It feels wrong, but it is the only way to effectively control the machine. The market operates under the same principle. To capture a major upward trend, a trader must be willing to endure small, temporary downward movements. These are pullbacks. They are the market's version of counter-steering. They feel wrong, but they are essential for a healthy trend. The failing trader sees a pullback and panics. They interpret the necessary steer-left moment as the beginning of a crash. They sell their position, yanking the handlebars, and convert a temporary dip into a permanent loss. They cause their own wipeout. The successful trader understands the physics. They see the pullback not as a threat, but as a confirmation of the trend's strength. They use that brief counter-steer moment to add to their position, knowing it is the prelude to the next major move upwards. This isn't about being fearless. It's about understanding the system's mechanics. The market needs to pull back to gather momentum, just as a bicycle needs to lean to turn. Resisting this fundamental law is like trying to fight gravity. It is a battle you will never win. So we have two physical principles: maintaining forward momentum by looking ahead, and navigating turns with counterintuitive moves. When you combine them, you get a complete operational model for market interaction. But what does this model actually look like in practice? Let's assemble the model. We'll call it the operator's framework. Its first component is trend confirmation. This is the equivalent of choosing your destination and getting your bicycle up to speed. You don't trade on a whim. You act only when a clear, strong trend is established. This requires patience. Most traders jump in too early. When the bicycle is barely moving and unstable, the operator waits for momentum to build. This means missing the absolute bottom of a move, but it drastically increases the probability of a stable, profitable ride. The second component is position sizing. This is your throttle. You don't pedal at maximum effort all the time. You apply power strategically. For the operator, this means not risking their entire capital on one idea. They use strict risk management to ensure no single crash can end their journey. The third component is noise filtering. This is the discipline of looking at the horizon, not the pedals. The operator uses tools like longer time frame charts to ignore the meaningless minute-to-minute fluctuations. They are deaf to the noise that paralyzes the novice. And the final component is pullback utilization. This is the mastery of counter-steering. The operator has predefined zones where they expect pullbacks. Instead of fearing them, they are viewed as opportunities to add to a winning position at a better price. This four-part framework transforms trading from a frantic gamble into a calm, physics-based process. It's a system for navigating chaos, but this entire system depends on one crucial factor: the operator's mind, and a hidden war is being waged for control of that mind. The operator's framework requires patience, long-term focus, and emotional detachment. It requires the ability to look at the horizon, but the modern digital environment is engineered to destroy these exact traits. It is a machine designed to force your eyes down to the pedals. Think of the endless scroll, the constant notifications, the short-form video loops. Each one is a microdose of dopamine, a reward for short-term engagement. This neurologically trains your brain to seek instant gratification and to lose focus on long-term objectives. This is not an accident, it is the business model. A brain trained for constant, shallow engagement is the ideal consumer. But for a trader, it is a catastrophic liability. It dismantles your ability to filter noise and tolerate the discomfort of a necessary pullback. You might have the perfect trading system, the operator's framework, but it will be useless if your underlying mental hardware has been compromised. You cannot ride a bicycle to a distant destination if you are neurologically incapable of looking away from the spinning pedals. This creates a state of perpetual financial anxiety. The market's randomness combined with the dopamine-addicted brain creates a feedback loop of impulsive decisions. Buying tops, selling bottoms. It is not a lack of knowledge, but a lack of neurological patience. So the real challenge is not just mastering the market's physics, but defending your own mind against a system designed to shorten your time preference. The first step is to see the prison, to understand that the war for your wealth is actually a war for your attention. We have revealed a hidden layer of reality. The physics of a simple bicycle provides a powerful framework for navigating the chaos of the markets. It is a model based on momentum, focus, and a counterintuitive understanding of control. This is the operator's framework. This mental tool allows you to see past the noise. It teaches you to distinguish between a healthy pullback and a genuine trend reversal, transforming fear into opportunity. It shifts you from a gambler reacting to chaos to an operator navigating a system with known laws. But we also uncovered a more insidious threat. The most robust strategy is worthless if the mind executing it has been compromised. The digital environment is actively degrading the very cognitive functions required to operate this framework effectively. This raises a critical question. If your tools for interacting with the world are secretly reprogramming your brain for financial failure, how can you possibly win? How do you defend your mind against an invisible enemy that is everywhere? The answer lies in understanding the precise neurological mechanisms of this attack. The link between social media and your wealth is not about ads. It's a direct assault on your brain's time preference. The video on your screen right now is the briefing you need for this war. It will dissect the hidden architecture inside every app designed to dismantle your financial patience. To protect your wealth, you must first secure your mind. Click on the video now to arm yourself with this critical intelligence. Do not let them win.